Yo, what's up, guys? Okay, I'm gonna be telling you guys probably some of the most important stuff you have learned in a while, and you're gonna really need to know this. So I was able to predict almost every single little move in the market today, and I've been able to predict this stuff for a while in the last like 2 months. 3 months ago, 4 months ago, I had no idea what was gonna happen in the market every day. I was literally lost, and just I was not doing so great. I was blowing up my accounts, and I just had no idea where the market was moving. And learning ICT has really helped me, and I'm just going to show you a couple of key things that you guys need to understand to how this market actually moves. It does not move based off of moving averages. It does not move based off any of that stuff. And I know that because I've been able to predict almost every single little move that's happened in this market. So I posted this yesterday. This was on US 500. I said we're going to bounce off this fair value gap, and if you don't know what a fair value gap, it's just this. I'm going to draw it real quick for you guys. Where's the thing? Okay, so fair value gap is something like this. See how this wick doesn't overlap this wick, and it creates this gap. You draw it from each wick. So this is a fair value gap, okay? And that's how I drew that. So if we go back to my Twitter, this is just one of the calls I made. I made so, like, even before I posted this, I actually made a couple other calls before this, like I thought we were gonna bounce way down here. Anyways, I've been able to predict way back. I've been able to predict all of this, okay? And I don't know if you're gonna believe me or not. I honestly don't care. I've said this in live time before it's happened to many people in many group chats, and I've just known myself. So you're just gonna have to trust me, okay? And I'm gonna try to make this more simplified than ICT. I'm not gonna try to rant a lot, but I'm just trying to show you this. So I said it would go a tad bit higher first. Why did I think that? Why would I think it would go a tad bit higher in these random wicks in the middle of nowhere? It's because algorithms go long in the discount. So what you're gonna do is you're gonna start taking a fib, and you're only gonna use the 50% level, okay? And you're gonna drop from swing low to swing high, the most recent, after we get a structure break. So if you guys see this, if you know what swing highs and swing lows are, you're going to look at this. See this last swing high? Look, we broke this and closed over it on an energetic candle, okay? You're just going to need to remember that. And after we did that, we formed this fair value gap. But I didn't think we were going to come down to this fair value gap until we went a little higher, because after breaking structure to the upside, as you can see when you draw the fib, after we broke this, discount for long algorithms, we're in the fib, we're in the fair value gap, just under in this discount area. This is your entry right here, okay? See the circle? I know it's really tight. Like, I know it's a really, really small entry, but that's gonna be your entry, okay? It's just under the fair value gap. I like when it lines up, but in this case, it just went right under. But I'll show you why I give this a leeway on US 100. It's because if you go to US 500, look, it's another future. It's the SPY index as well. Look, same thing. We have the structure break. We close above, okay? And look, we create this fair value gap. But this time, in this fair value gap, you guys have to realize it's this whole thing. So this is pretty big. And I gave it leeway on US 100 to enter long and discount because this never hit discount. So it came very close, but it didn't. So you're going to have setups that do that. And that's why I like watching bull charts. But the reason why I still took long, or why the play was still long and discount on US 100, was because when this wick was here, we were still in the middle of the fair value gap in US 500. So you kind of have to use these charts in confluence to make it make sense, okay? So this was your long area. And I know, like, who the heck would enter right under there? That's an insane entry, and yes, I know that's an insane entry, but I've seen this stuff repeat time and time again, okay? After we get these structure breaks for reversal. And another reason why I thought we are going to reverse from this fair value gap is this. If I go to US 500, again, I look at US 500 a lot, but sometimes I look at US 100. Mostly I look for US 500. But look, see where I draw this? Wait, you probably thought, or see where I draw this line? You probably thought this was resistance, okay? But this is not resistance. This is liquidity. After we break structure, see how we broke structure, we form a fair value gap, we retrace into the fair value gap, we will hit these equal highs. I've seen it time and time again, every single time. And want to know something else cool? If you draw a fib on the higher time frame from the last swing low, last swing high, after breaking the structure, we were never in premium for shorts, okay? This is where shorts want to enter. This is where smart money shorts enter. This is where smart money longs enter. This is why we enter in discount here in US 100, and we're still in discount for longs in the entire time frame, okay? Because no matter what your bias is, shorts are going to short up here in this liquidity void. So that's just really important. And if I told you to take one thing away from this video, it would be looking for these equal highs and these equal lows, okay? Look what happens, ready? See these equal lows? They're not exactly perfect, but they're very, very close. This is what I look for. This is the model that I've actually posted on my Twitter. I'm going to go to my Twitter real quick. Look, this is the model I posted. This number 1 is the equal lows. This is liquidity. So if you look, 1, liquidity grab / stock pond. I look for this liquidity grab, okay? And then I look for 2, the market structure shift, okay? This is the market structure shift when we go over this line right here, boom. And then we created the fair value gap, retracing the fair value gap. I've seen this so many times and times again. And I don't even, it's probably failed, but I don't remember a time it's failed. And I want to be the guy to say, oh, this strategy doesn't work. It's going to have like a 60% win rate. But no, this has a very, very high win rate. Like, I'm not even over-exaggerating this. And in order to make it have a higher win rate, okay, I suggest looking for equal lows and equal highs, not just random swing lows and swing highs. Some people say swing lows and swing highs, like the random swing lows and swing highs, work for them, but I have a way higher success rate when I look for these equal highs and equal lows. Okay, so look what we do. We grab this liquidity under here. Why does this work? It's because retail has buy stops under there. So we grab all this liquidity under there, and that's when we retrace, because this is when dumb money goes short, because they're like, oh, we broke the last swing low, I'm going short, okay? And it makes sense because on the higher time frame, we're still way overextended, and we're not even close to premium for where smart shorts would short anyway, okay? Because that's going to be up here in discount above this 0.50 level, okay? So this whole time, these whole days I've been saying we're going to these equal highs right here, okay? And I posted it on my private. I don't know if you guys follow my private. Let me see if I can find it. I mean, I'm not trying to prove to you guys. I really hope you guys would just trust me in this, to be honest. So, like, this was my actual target for the week. I've said this, I think, Tuesday or Wednesday we were going to these equal highs after we got this huge retrace. So, basically, what I predict in the tweet is us going down here, then up. Why did I think that? Because these equal highs, okay? That's important to realize. And we already grabbed liquidity below. We were in discount for longs, and we needed to go to premium for shorts, okay? So, this morning, I thought I was done for this week, but no. Look at this. Oops, music just started playing. Look at this, ready? I was talking to this guy earlier, and at first I was kind of hesitant on whether we would hit these equal highs. Hopefully you can see them before I'm pointing these out right away. Ready? These are equal highs, okay? Right there, very, very close equal highs. So you just gotta understand that, okay? And if I go to Twitter, I said, because if you look now, we don't really have any clean equal lows anywhere. Why did I say that? I go, I still think we hit 407 too, but I'm just trying to show you how they create liquidity on the way up. So this is me explaining how market makers actually make liquidity for the target where I'm very, very sure that we're going to get to. Why was I so confident in this target, and why was I so confident in this target this morning? It's because we still weren't in premium. This is where smart money shorts. So the fact that they created this liquidity up here, these equal highs, and the fact that we created this like almost like quadruple top up here, that is so much liquidity. And it makes sense since we had a market structure shift to the upside because we broke this last higher low. We created this FEG. And these are going to be your targets, because in order for the market to move, we need to stop people out. We need to get liquidity. And there's a lot of big money out there who's actually very dumb. They will have stops above here. It really, it probably depends on the season, but there's some very dumb money that someone, like people, you guys watching this video can probably be smarter than. And they're probably a bunch of 50-year-olds who have been trading with the MACD all their life. So I mean, they don't know better. Okay, so so as you can see, these equal highs, I said at 8:55 a.m. this morning, which is around wait, when did I even say it? I said it at 8:22. Okay, if you go back, 8:22 is like right in this candle. Okay, and again, I was expecting this retrace to this wick, and I said I want 4072. Well, if you look, 4072 is right here, this line. Okay, I said that because of these equal highs, and I was hesitant at first, but after looking at it more and I drew the fib in the higher time frame, I saw we were still in discount for shorts. I literally knew we were going up there, and that's why I said, look, I still think we hit this, but I'm trying to show you how they create liquidity on the way up. So like I said, I'm trying to show him how market makers create liquidity to go up. Okay, so first things first, this I really hope you guys understand this. If you know the strat, what is this? What is this? This is a 2-2 reversal. When we make a high and then this wick goes below the last low, this is a 2-2 reversal. Strat traders would expect to trade down here. Okay, that's just one of the things the market makers do. I knew that wasn't going to happen. Why? Because we're going up here. So if you do the strat, all the strat people are stopped out. Okay, I knew we were going to these equal highs. I knew we were going to discount for, or a premium for longs. So now I'm going to show you about every single move I predict this morning. And I'm not going to show proof or anything. I was talking to this group chat all day. I was basically saying all this the whole time, okay? And I'm going to show you. So keep in mind what I said, okay? Read this carefully. I said, I'm going to try to show you how they create liquidity on the way up. So for me personally, liquidity can be a swing high and swing low, or it can be equal highs and equal lows. I always look for equal highs and equal lows. Why? Because when, look, okay, I'm going to show you guys something. This is the 1 minute chart. This is what I trade on. This is where you will see all this stuff. Okay, ready? If you look right here, I'm going to draw a line. Why would we randomly reject at the same exact spot, okay? This is not random. We're never going to reject. This is perfect lows, okay? Why would you just randomly reject at the same exact spot? Okay, this is market makers. And when I was explaining to that guy, I told him, I was like, I'm going to show you how market makers create liquidity on the way up. This is how they do it. I posted on my private store, or on my private. I'll show you guys what I posted. It was actually part of the model I posted the other day, my second model. I don't know if any of you noticed this, but if you go to my Twitter, look here. That's actually what I'm predicting, and I'll show you why in a second. Look, okay, I could see something like this happen. Why do you think I said that? Well, if we look what happens. Ready? This is the 4,072 level. So this is going to blow your mind. This is the 4,072 level. Okay, do you guys see that? That's what I thought we were going to. This is the equal highs. Do you see how we randomly reject right there and we don't hit it? Why would you randomly reject a major liquidity level that provides liquidity in the market and not hit it? It's so smart money can get in. And as this was happening, I was explaining this live. Ready? In my tweet I said, let's see. I think this was an inducement as in my model 2, not a market structure shift. So what does this mean? A lot of people think this right here is a market structure shift. See how we break this last higher low? But I said in live time before this even happened, okay? I said when we right there, this is inducement. And inducement basically means we go below this and back up again. And I said, why would you randomly reject the 4? So smart money can reload. And that's exactly what happened. So you look at my model, and you look for a fair value gap or order block to reload in, okay? And If you guys kind of see, there's no clean fair value gaps in the 1 minute. If we go to like the 3 minute and look at that same spot, if I can even find it again, let's see. Okay, right here. So if you go to the same spot, you can kind of see there's no fair value gaps on the 3 minute. So 1 second, 1 o'clock. Let me check the 5 minute real quick. So look, 5 minute fair value gap right here. See this? And as you can see, it went right under and capped this order block. Well, almost. But your entry is in this fair value gap. Why? Because first of all, look, if we draw a fib from the swing low to swing high, let me just delete these because these are really confusing. Swing low to swing high. Look, this is in discount for longs on the smaller time frame, okay? And we still had it hit that major 4,072 level. And I even said in this group chat, I go, notice how we rejected at 4,072.4. We rejected it, I think, and not 4,072.9. And I said this is so more smart money can get in, okay? And I actually moved this down a little. I'm gonna put in 4,072.9. So we rejected at 4,071.4. My bad, I was a little off. And then look, we rejected at 4,072.7. Okay. And look, watch what happens. We create these equal lows, okay? I want you to notice this. And we still had it hit 4,072.9, as I've been saying all day. Excuse me. And we had a fair value gap right here in the 5 minute. And this is liquidity. Do you know how many people probably had buy stops right here? And how many people probably went short right there? That is smart money's entry. They buy all that up. Like, you can see how perfect these are. You can see we still haven't hit major liquidity, and you know smart money wants to re-enter. So what they do is they re-enter in discount on this fib, and it gets moved up to 4,072.9. And actually did the wrong thing. So right there, and look, same thing right here. Okay, look, we barely reject it, okay? We just reject it, but we don't actually hit it. That is a key thing you guys want to realize. Mark up these equal highs and equal lows you think the market's going to. Every single time this happens, we reject right before, not always, but if we reject right before, you know that we're still going to hit it. So that's when you look for your entry. And look, this is exactly when we get the model I posted yesterday, or the other day in Twitter, okay? The model is, if we reject right before, you look for a retrace. A lot of people think this is a market structure shift. No, it's not. And that's why retail gets wrecked, because they take puts there. So look, same exact setup, okay? People are going to say this is a market structure shift. They're going to take puts here, 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 and they're going to get wrecked. And you can see shorts got killed trying to take puts here, right? Because you can tell by those wicks. We kind of ran into a roadblock. Why did we run into a roadblock? It's because shorts thought this was a market structure shift. They thought we were going down, but no, it's not. This was an inducement, okay? And this wick did go a little lower than I expected, but it held this swing low, and I bet you there's like a 5 minute order block right here. So let me check real quick. There's not really a 5 minute order block. Let me check the 3 minute. So in this scenario, there's no fair value gap or clean order block, and at this time I wasn't looking to enter here, but I was still saying notice how it rejected right before, because I still thought we'd get up here, okay? So there's no really clean entry here, but there was a clean entry right here on the 5 minute, okay? And you still wouldn't have got stopped out. Maybe if you're doing 0 DTE options and you're a degenerate, then yeah, you would have got stopped out. But every single time when this happened, I said notice how it hit up there, but it never actually hit 4,072.9. It's because smart money wants to get in. They need more liquidity to go up. And if you look here, it created even more equal lows right here, went below them. More people went short probably. Look, boom, bounce right back up. Right here, look, went below these equal lows, boom, bounce right back up, okay? And I'm going to show you something else from earlier as well. Look, okay? Equal lows created right here. This is just another example of what I was saying earlier to this guy on Twitter. Look, It's not here anymore, but I was basically showing them. Oh wait, it is here. Okay, no, it's not here. I was basically showing you. I'm going to show you how market makers create liquidity to go up by stopping out longs and by wrecking shorts at the same time. More equal lows. These are perfect equal lows. If they're not that close together, don't draw them. Trust me. This is like perfect equal lows. Look what happens. Do you know how many people probably went short right here and got wrecked? But no, we go back up here. Look, we created double top. More perfect liquidity. And I knew we were going to this price target, 4,072 all the time, this whole time, so I knew we'd go back down here. Again, and then we go back down here under again, which is even crazier. And we wrecked the shorts once again. Okay, so look, we go under this swing low. And this would probably be liquidity, but as I said, I like using equal lows and stuff for liquidity because it's much cleaner. But it held this order block at the swing low. So if you look at the 5 minute, I don't even know what time this was at. Okay, it was right here. So this was this morning. It held this 5 minute order block. Okay, this is a 5 minute order block. If you guys don't know what order block is, look at my thread. Okay, it's on Twitter. You can just DM me and ask me for it. So look, this red candle before that move. This is the order block. It held the order block. Before the market even opened, I figured we'd bounce here, or I figured we'd bounce in this fair value gap or this fair value gap. Why? Because we had those equal highs above. I was almost 100% sure we were going to hit them. I just had to find the way to get up there. So, and it's important to retrace and have healthy retracement. So that's why I'm not surprised we even bounced there after making these engineered equal lows, taking out shorts, okay, and then bouncing up there, right? So do you guys get what I'm kind of saying here? It's the same thing when we're in downtrends, okay? So you guys got to realize it's the same thing when we are in a downtrend. There's going to be equal lows and equal highs form so much on the 1 minute, especially if you know where you think we're going. So if you see like obvious equal lows like on the 1 hour, 4 hour like that, and we have a market structure shift, a really good one with a fair value gap retrace, say you miss your entry in the giant fair value gap that I predicted we'd bounce off of, but which by the way I actually did take a long, but obviously if you have a small account you just can't buy in the middle of a random zone, right? You're gonna have to go to a smaller time frame like the 1 or 3 minute and look for the same exact setup but on a smaller time frame, but it's gonna be in a tighter range so you can easily enter. Some other things I see, look, we created almost a double top right here. This isn't perfect, but look, we go above and then we retrace back down and we make more engineered lows right here, more equal lows, okay? And that brings me into my next point, okay? This is where I think we're going. When I said on Twitter, I go, I'm going to show you how market makers make equal lows on the way up. No, I'm right. Sorry, excuse me. This is where I do not think we're going there. Maybe in the future, but for now, sorry, that was the wrong equal lows. But it just shows you, it just goes to show that no matter what, on the way up, the market makers are always creating liquidity. These equal lows, these equal highs when you go down. This is where I think we're going. So today I actually wanted to long at 4044, and it was a fair value gap, okay? And look, it was a fair value gap right here. I never got my entry, but what I did see is I see the market makers engineer these equal lows, okay? And they made these equal lows right here. And why do I think they did this? So if we go on the higher time frame, I really hope you guys are catching on now. I hope it makes sense. If you go on the higher time frame, when I tried getting an entry at 4044 this morning, I'm going to show you something, okay? I tried getting an entry right here. If you draw the fib, as I was showing you guys this morning, 440 was right on this fib from this swing low to swing high. When we came up here, I was trying to get an entry down here. It's right on this swing. It's right on this, okay? So look what happens next. We create another swing high. So now 440 is in discount for longs if we go on this in a smaller time frame. But look what happens next. I'm going to expand the time frame, okay? And I'm actually going to do this. I'm going to draw a swing low to swing high. Sorry, I'm going to go to the 1 hour actually. to see the most obvious equal lows, or to see it most obvious, okay? And I just accidentally switched this. Now I'm gonna delete this. You guys know liquidity is up here, hopefully. Look what happens. After the whole day, okay? After the whole day, if we draw the swing high to swing low, from 9 o'clock to the end of the day, okay, you're gonna see that 4040 is now a discount. Okay, so the whole day we were just going higher to make where I think we're gonna bounce and discount. Okay, and if you guys look, it's an order block right here. Okay, so this is an order block, and if you guys look again, it's a 15-minute fair value gap right here, kind of small. And if you look again at the 5-minute, it's a 5-minute fair value gap, but I'm not gonna try to show that to you guys. It's a 30-minute fair value gap too. Okay, so it's like 3 things or 4 things on 4 different time frames. And I'm gonna take a position there off like initial reaction, okay? And I don't know if we're gonna bounce from there and hit liquidity way up here again, because as you guys can see, the market makers did create more equal lows as we were going on the way up. And by the way, look at this. Oh yeah, I already showed you guys that in the 4-hour thing. Oops. So like on the way up on the smaller time frames, there's more equal lows the market makers were creating. For example, these two kind of, and these two. And technically, if we do fall below this, because this is a strong order block, I would say if we do fall below this, it's a market structure shift. But I do expect an initial reaction off this 4040 level. I'll probably just take it for a scalp, because once we do break this, actually, I am looking to short. And why would I be looking to short? Hopefully you guys can remember. On the higher time frame, you could probably draw your fib from here to here. We're way overextended now, so I think we're going to go somewhere in discount, way down here, and then bounce again. But I mean, I have a limit on like the 4040 level for maybe like a small scalp, 10 to 20 points. As long as when we get there that day, I actually have to, I'm not just going to keep the limit there and keep it forever. It has to be like right for that day. Like if we go into a morning and I see very, very like bearish candles, very, very bearish fair value gaps we're rejecting out of nowhere, like I'll obviously take the limit away. But we'll see when we get there, okay? But as you guys can see, all day we are creating these equal lows, and we are just going down to them. We were crossing them, and then we went back up again. And why did we do this? It's because we had those equal highs above at 4,072. I thought we were going to this morning, and I was very, very confident we were going there. Okay, I've been correct about the last like 5 of my price targets, and my next price target is down here to these equal lows. We'll see what happens from there, but I think we have a small bounce in here, and then we'll see what happens after that. I just manage my position. I'll take an entry, and I'll have my stop somewhere, and I'll just scale out as we go. So we'll see what happens. But I really hope you guys realize and start looking for these equal lows and equal highs that you guys probably see as double tops and double bottoms. As you guys can see, like right here, look how many equal highs there was. This is a whole liquidity pool. We go over it, and then we retrace back under it again. And look, equal lows, I'm pretty sure I already showed you this. Look, we go under these equal lows. Shorts probably try to go short there. They get wrecked, okay? So I really hope this opened from late for you guys. Definitely watch this when you get time. If you can. Obviously, if you're here, you probably watch this whole thing, so I'm just going to stop talking now. So, yeah. Let me know if you have any questions. I'm going to start making more videos on stuff I see in the future. I'm not calling all this in hindsight. I'm not even kidding when I was like saying this live in a group chat for most of the day. And like there's some stuff, I was typing all day, so I never really said anything. But you have to trust me, in my head, like I can figure out where we're going. And it's just looking to 1 minute, just noticing these tiny details that the market makers do. They create these equal lows, equal highs. And it's knowing where the equal highs and equal lows are in a higher time frame. There's been some weeks where I haven't taken a trade because I haven't seen obvious equal lows or equal highs, okay? And that's okay. And I just enjoy my week, okay? This week was perfect. We had a ton of them, okay? So I'll see what this future brings. But yeah, hope you enjoyed. Let me know if you have any questions, and I will go over more of these concepts in the future, like smart money concepts. They're very, very helpful. But yeah, peace out.